we still go and buy it? Let's deep dive to understand more on this and wait till the end on the valuation. This video consists of 4 parts. 1, the company overview. 2, the industry trends. 3, the company overall stock market performance. And 4, and the last is the valuations. It started in 1992 in Telangana, India. The company primarily source cocoa beans and process it for manufacturing of chocolates and cocoa derivatives. Primarily, the company has 2 divisions. One is business to business and business to consumer. We will dive deep into each one of them and then discuss more in detail. Back to business. The company primarily source cocoa beans and process it for large chocolate manufacturers. The key challenge is the price fluctuation of cocoa beans. As you can see in the graph, the price has actually shot up from 2,000 to 8,000 per ton in the last 2 years. The company strongly feels that the prices should stabilize in the coming year. This is primarily driven by the climate change and soil erosion. Moving on to B2C segment. The company produces its own chocolate and does a retailing internally. This segment produces only 5%, and remember, B2B segment produces 95% of the revenue. This chocolate and confectionery industry is estimated to be roughly around 25,000 crore. 75% of the industry comes from the chocolate and 25% comes from the confectionery. This industry is expected to grow from 25,000 crore to 35,000 crore at a CAGR of 10% in the coming year. Around 60% of the cocos are produced from Africa, and 65% of the entire chocolates are consumed from the European markets. The industry is dominated by international players like Mondelez, Nestle, Mars, Ferrero. They own 85% of the market share. Indian companies have just started catching up. The Amul is one of the primary examples. Now imagine Indian companies, organized companies like Amul and Lotus, they have a huge market to play in. For the record, Lotus is just doing 1% of entire market share. Talent pool has got 2 product categories, premium segment and affordable segment. On the premium segment, primarily it is driven by the international large players like Mondelez, Mars, Ferrero. And on the affordable segment, it's open and unorganized players normally do it locally. I think this is where Mukesh Ambani wants to play a role in a very big way. Currently, they have few products under their belt like Chuckles, car, supercar, on and on, etc. Coming to the stock market, company trends. When you see, after Reliance took over in June 2023, the company skyrocketed 10x from 150 rupees to 1,500. This shows how much market is believing in Mukesh Ambani. Into the balance sheet of the company for last 2 years, you can see the revenue has increased from 62 to 200 crore. It has just turned net profit and it's a zero debt company now. I have compiled key data points to simplify in a table. As you see in the table, sales from last year return is 275 and a 3-year return is 44. Profit of 247 for last year and 3-year return is 0%. Free cash flow, it has just turned positive last year. Stock price 387% of last year and the 3-year return is 247. Both ROE and RCO trend, which is to the evaluations with the current EPS of 7.8, the cash flow turning just positive, and it's a net zero company. However, looking at the above data points like what we saw now in the table, I still feel the valuations are very high as of now. The current market price is around 1,500 rupees. To summarize and conclude, I like this company very much for following reasons. 1, it has got a good, strong promoter. 2, it's a very good turnaround story. Three, the financials are getting better as we speak. Coming to the opportunities on the industry, it's a 5 billion evergreen industry. On the valuations, however, I feel it is like to recommend buy below 1,000 rupees for now. See you soon. Until then, bye for now.